Good morning, everyone. Morning audio notes here. We have corn up 2.5 to 570 and 3/4. We have Jan beans down 5.5 at 1244. Chicago wheat is up 11 and 3/4, 784.5. Friday's commitment and traders report showed mostly what we would have expected. Corn funds were buyers of 25,000. Wheat, they were buyers of 9,000. Beans, they bought about 6,000. Of the grains, the only surprising number is the bean number. 6,000 buying of beans, we knew to expect funds to be smaller buyers of beans and corn, but 6,000 might have even been about half of what trade would have expected. Even if they had bought 12,000, that would be significantly less than the amount of corn they bought. So that could be a solid reason why we're seeing corn and beans trade the way they are here in overnight. Much higher expectations that funds will be back here during the day session buying corn again, where in beans, now seeing an actual number put to it, not really expecting too much buying from them at all. Wheat seeing another added bonus as there was talk again of overseas wheat buying, this time Egypt. There was a tender. We're waiting to hear what the size of it is. Again, the spillover to wheat for Chicago wheat probably has more to do with fund buying than overseas wheat talk or overseas wheat demand talk. So as with all the grain markets, we'll see if the funds show up after the start of the day session or not. We should start to see some early estimates for next week's USDA demand and supply report. Right now, yields are estimated to stay about the same for corn, no surprise there, and maybe a small increase for beans. So another reason why beans may stay under a little bit more pressure. Keep in mind, last month's carryout of 1.5 for corn and 320 for beans. If we change no numbers at all, those numbers still suggest much lower prices than what we currently have priced in. That 1.5 number, that doesn't change. That it still suggests $5 fair value for corn, and the 320 carryout for beans still says 11 to 11.50. So that's why we say again, if funds are here, we will trade higher. If they're not, the fundamentals on their own would suggest that we trade lower. Switching over to cattle, the pattern continues in that market that we end cattle each week on an extremely cautious amount of trade. We would guess that today's average cash trade report should show cash up about $1.50 last week to 125.50. In the meantime, December futures on Friday only assumed 250 higher trade for the next 2 months. So to say cautious would be an understatement. If we do end up with 150 last week alone, higher in cash, pretty surprising. Futures would price in we're only going to see $2.5 more through most of the rest of the year. So we'll see what we get here. The pattern has been a strong start to the week. So a pretty active support Monday, Tuesday, Wednesday, and then a cautious ending to the week in cattle. We'll see what we get again. We'll see if we see that support. And of course, we'll see what we get for show list, keeping in mind 4 of the last 5 have been lower. So if today is lower, that solidifies high likelihood of a higher cash trade. And even if it's slightly higher, we still might see a slightly higher cash trade, as the 6-week total would be still a significant reduction. So we'll see what we get here today. If anyone has any questions, give me a call. Thank you.